Now, why would you sell it? And the only answer, which you pointed out, is like, if you want to buy a jet or a yacht, if a maximalist wants to buy a jet or a yacht, I respect that. If you want to buy the palatial villa of your dreams in Ibiza, okay, have at it. If you want to get married, or if you want to marry your daughter, or send off your kids or send them to college, if there's something you love, an expenditure or an asset of passion, I think I can respect that. And by the way, if there's something that's a life or death issue, you're going to sell it to give a kidney to somebody, or to save a life.
Sure.
I respect that, but it needs to be an expenditure of passion. If you're just selling it in order to trade into another financial asset, right? You're a fool. Right?
Yeah.
So selling the long duration pharmaceutical grade synthetic safe haven asset, the first one, selling that to buy something which has got more exposure to fiat debasement or to complexity or other types of risk, or shorter term, is kind of just, you had the thing solved and you unsolved the thing. And so anybody that says they're going to trade it, the conclusion you come to is they just don't understand it. They literally don't understand what they're doing, and they don't understand what it is. As soon as you understand what it is, you're just going to sweep all your excess monetary energy, your savings account, into this and hodl forever.
The interview I have for you today is from the John Vallis Bitcoin Rapid Fire YouTube channel and is done in November of 2020. This will be linked in the description. It's a smaller channel, and John Vallis is a very well-informed interviewer and does a great job. I have several shorter clips from this interview today. In this first clip, Michael makes the case for why the world will be better off with a financial system that's created by engineers versus a financial system created by politicians.
One idea, I mean, it may be a big idea, is maybe the world would be a better place if the engineers ran the monetary system instead of the politicians ran the monetary system.
No shit.
Because on the left hand, you have the domain of politicians, and on the right hand, you have the domain of the engineers. And, like, how would you feel if you had a nuclear power plant and a politician showed up and started telling you how to set up the rods?
Exactly.
Right? Like, nobody would think, they would never consider allowing political interference in most complex engineering systems, because any third grader would say, you don't do that, you're going to have a meltdown, right? You're going to kill us all. Yeah. And so in the domain of engineering, engineers submit their decisions to the laws of nature and conservation of energy. And there are rules, and they're not allowed to break them. And if they break them, right, the engineering systems fail. But in the domain of politics, right, there are no rules, and so it's all relative. And Bitcoin represents the singularity where engineering finally impinges upon economics. It's the first engineered monetary system in the history of the world, right? And I think we underestimate the engineering element here in the memes and in the metaphors. People trust engineers. I mean, every time you get on an airplane and you find a 747 halfway around the world, I'm an aeronautical engineer. It's a miracle that you can take off in an airplane in New York and you can land alive in London or Paris. If you had any inkling of all the ways you can die, and inkling of all of the engineering challenges you had to overcome, and if a politician came along and said, we just thought we would take one of the wings off the airplane, or we would add 3 more, right? I mean, no one would think about it. So I think that the magic of Bitcoin is that engineering is arriving to economics for the first time in human history. Mm-hmm. And the challenge of gold, to your point, is number one, it's a corruptible monetary system because it's centralized. And number two, it's not a closed monetary system. It's an open monetary system. I mean, a closed engineering system would have 21 million things in it, and only heat can come in and go out. The mass can't come in and go out. Bitcoin is a closed system because there's 21 million Bitcoins, and you can heat it up, you can cool it down. All closed thermodynamic systems are like that. That's the definition of a closed system. Closed systems are a pretty good idea, right? An open system is when I can put more mass in or take mass out. Open systems have problems. You can't solve for a solution in an open system because of the question of what mass is coming and going. And in gold, right, the openness is I can mine more gold. I don't know how much gold will come and go. And so if I was building a monetary energy network on gold, it's corruptible and it's not closed. If I built, then I rebuilt the monetary energy network on Bitcoin, and it's closed system, and it's hopefully not corruptible, but certainly a lot less corrupt. It's crypto, resistant to corruption. It's the best anti-corrupt system we could come up with in the history of the world. And I think that's a really important idea to spread for people to start to grasp, because I think you'll win over all the engineers in the world to Bitcoin when they start to understand that somebody engineered a monetary system for the first time in human history. Because if there's anything we all agree on, we kind of generally like our engineering.
Michael wrote this book called The Mobile Wave, and in this next clip, he talks about the first iPhone and what that meant for Apple. I believe the next decade will be dominated by a Bitcoin wave that will ultimately dwarf the mobile wave. Michael made $500 million on the mobile wave. He was correct once, and I believe he's correct again.
Like if you roll the clock back to 2007, Steve Jobs invents the iPhone. And, people thought, oh, it's a toy. By 2009, the iPhone's got an app store. And if you understood anything about software, the iOS is a new operating system, and it's going to be its own ecosystem, at least as important as the web. And it's going to spawn an entire new generation of applications, right? And the mobile wave is responsible for what, like $5 trillion, $5 to $10 trillion of wealth over the next decade. Can you imagine someone sitting around saying, oh, I get mobile device technology, and you're trying to time the market in Apple stock in 2011? Like you're buying and selling Apple stock in 2011. You want to shake. I'm like, are you out of your mind? I'm trading Facebook stock back and forth between $8 a share and $4 a share and $12 a share. And you just want to do this. Like, do you not understand that one day every single person on the planet is going to have one of these things in their pocket, and it's going to go up by a factor of 100? And you're trying to trade Apple stock between $1.25 and $1.17 and bragging about how you bought it at $1.25 and sold it at $2.11. And have you figured out the consequences of being short the share if it goes up by $100? Like the amount, are you out of your mind? Because, by the way, I spent 30 years in the business, and I obsess over this every single freaking minute of the day. And I wrote a book on it, right? I wrote the book. I predicted the future. I made $500 million investing in these things, right? And I started, and I put a small amount of capital in. And let me tell you one thing, John, I can't time the market. I have no freaking clue. In 2009, 2010, 2011, 2012, I have no clue. And I'm certain nobody in the world understood it better than me. Some people might have made more money than me, but all these people that think that somehow they're going to time the market and they're going to guess, it's probably 10,000 times harder to time the market when you know the future than it is to sit and to wait for a decade. And this Bitcoin thing, this kind of is working in 12 weeks or 24 weeks. But when I did this, I didn't expect it to work in 12 weeks. I did it thinking that in 1 to 3 years, people will think I'm not an idiot. And in 10 years, I'll be happy I did it. And I'm ready to get beat to death for the first 1, 2 years if people are going to beat me to death, because you could have been beat to death on Facebook stock and Apple stock and Google stock and whatever in a 1 to 2, 3 year time frame. There's anybody that tells you that they actually know the direction of this stuff over the course of days or weeks or months, they're deluding themselves and they're deluding you. And it's almost comical because they all hold themselves out as being like experts in something. And like, I have been the expert in something. And the one thing that I knew was I had the only time I ever lost money on Apple, the only time. But can you imagine losing money on Apple stock investing in the last 20 years? At any point in time from 1997, there's not a single way, John, you could have lost money betting on Apple stock as a hodler in 22 years, except I did it. I'm going to tell you how I did it. I bought an option. I bought a leap. I actually bought a call option, but not short, long. I went long Apple stock. I bought call. By the way, I'm not going to go long Apple stock with a 30 or 60 or 90-day option. I bought an 18-month leap option on Apple stock. The stock traded down. It stayed down 17 months, 18 months. My option expired. I lost the premium and the stock shot up. And I'm saying, I freaking predicted the future. I wanted some leverage. I'm so angry. And the takeaway from that is, if you believe in something and you have conviction, buy the underlying asset, ideally with very low leverage or no leverage, and hold it forever.
This last clip is a funny story about Michael's first Bitcoin purchases and the pitfalls of buying too much Bitcoin at once. Then he explains how big institutional investors will be thinking when it comes to Bitcoin. I found this very interesting. Enjoy the clip.
I started buying Bitcoin, and they thought I was going to buy like $10 million worth of it. And I wired in $100 million and I started buying it, and I bought 25 million in the day. And no one had ever bought $25 million worth of Bitcoin on their exchange in a few hours. And they said, well, what you're burning up the entire system and you're blowing out the spreads. And this is a big problem and you're going to drive the price up. And I said, well, I just need to get this stuff. Like I can't, by the way, the price was down in the 9s. And I was just imagining someone was going to get smart and drive the price up to 10 or 11 or 12 or 13. And I was going to chase it up. So I had anxiety. I'm like, I have to get this trade in before the rest of the world comes to its senses. So I'm buying it. I swear to you, they put me in a corner and they said, you have to stop now. You're buying too much. Like they literally put me in a corner and said, you're buying too much. All the other people on the system feel like you're driving the price up. And I'm like, are you kidding me? Like, really? And then I went to bed that night, and I was just really like worked up. I could hardly sleep because they had cut me off when I bought 20 million and I wanted to buy 35 million that day. And I was like, what if the 15 million that I didn't buy starts to run away from me? It's going to cost me millions and millions of dollars. It doesn't really matter how much you buy, right? It's the same idea, which is I need to buy it all now before somebody figures this thing out.
Exactly.
And by the way, if you look at the dynamics of this as an asset, if I bought $100 million worth of Apple stock today, I could say I have big tech exposure. And then at the end of the quarter, I could say, well, maybe I should sell Apple and buy Google, or maybe I should sell Apple and buy Amazon. And I'm still kind of big tech exposed. I mean, you could trade Twitter for Facebook or Facebook for Twitter, or you could decide that you don't like Facebook anymore, but you like Google. The world's not coming to an end. Anybody there's a lot of supply of big tech, $10 trillion worth of it, right? On the other hand, if you decided that Bitcoin was your thing, you're going to buy a crypto asset and you buy $100 million worth of Bitcoin. And this is, I say this because this is the way the institutions that buy this stuff are going to think. Well, they're going to come in there and go buy 100 million or 200 million or 500 million. When you decide that you want that, you go through this thing of, okay, what do I want? Well, I don't want big tech because I don't like the underlying exposure to fiat cash flows. I don't want gold because, again, counterparty risk, and it's an open system and the gold miners are a problem. Okay, I want crypto. Which crypto? There's 6,500 cryptos. Well, write off most of those. Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay, what's the second best? There is no second best. There's no second best crypto asset. There's a crypto asset. It's called Bitcoin, right? Right? There's no second best. Okay. It's not like Google and Facebook. It's not like Apple and Amazon. Yeah. We can debate Apple or Amazon. What's better? They both look like tech monopolies to me. They both look pretty good. On the other end, Bitcoin or no, Bitcoin. Bitcoin's crypto asset. This entire idea of like 60% dominance is bullshit, ridiculous, stupid, right? Like, it's stupid. It's not 60% dominant. It's like 96% or 95% dominant, right? The thing, if you compare it as a crypto asset to a like kind of proof of work crypto network, right? That's meant to be a store of value. You're lucky if you can scrape together 5% of other stuff in the last bucket. So there is no real competitor. So once you go down that path of, well, big tech, no, this is not my big tech allocation. Gold, this is not my gold allocation. Crypto asset, this is my crypto asset. Bitcoin, it's the only one. Now you got to squeeze through a nozzle, which is $1 billion a day, and you have to buy it. And once you go through, I joked to my friend Eric, I said, I should tweet, this is the Hotel California, of assets. Like, you check in anytime you want, but you can never leave. He goes, no, you can't tweet that. That's the dark reference. Like, I can't tweet it. Like, I can't. And then this morning I see like Nick tweets it, right? It's on the Twitter. I'm like, look, he tweeted it. It's not, I wasn't so stupid after all. Like, it's a one-way valve. Okay. Yeah. So it's one way, you're buying. Why else is one way? Because it's long duration. Like, it's the ultimate long duration asset. And this is, if you don't get this, you just don't get this, right? I say 100 years, you could hold it 100 years. You're definitely, it's longer duration than any bond, any stock, any gold, if you do the math. So I just bought the pharmaceutical grade synthetic gold, pharmaceutical grade, long duration, safe haven asset. That's what I bought. There's nothing better. Now, why am I ever going to sell it? What am I going to trade it for Google? Well, no, I can't trade it for Google. I can't trade it for Amazon. I can't trade it for gold. I can't trade it for any other crypto. And so it's a one-way trade. So why would I ever sell? By the way, when I do sell, I get a tax hit. So I'm going to get capital gains to sell it. So that's a deterrent from selling any asset. But my deterrent for selling an asset is I can't find a better treasury reserve asset. There's nothing longer duration. There's nothing that's going to last longer. There's nothing that's going to be more anti-fragile. There's nothing that's going to have a higher theoretical long-term yield, right? The long-term theoretical yield on Bitcoin is like, it's the monetary inflation plus the technology utility increase plus the surging adoption. All of those three in the near term, and over the long term productivity growth of the economy that adopts it as the standard. So those things are all going to drive it. They're all going to drive it in a compelling way. So now, why would you sell it? And the only answer, which you pointed out, is like, if you want to buy a jet or a yacht, if a maximalist wants to buy a jet or a yacht, I respect that. If you want to buy the palatial villa of your dreams in Ibiza, okay, have at it. If you want to get married, or if you want to marry your daughter, or send off your kids or send them to college, if there's something you love, an expenditure or an asset of passion, I think I can respect that. And by the way, if there's something that's a life or death issue, you're going to sell it to give a kidney to somebody, or to save a life. Sure. I respect that, but it needs to be an expenditure of passion. If you're just selling it in order to trade into another financial asset, right? You're a fool. right?
Yeah.
So selling the long duration pharmaceutical grade synthetic safe haven asset, the first one, selling that to buy something which has got more exposure to fiat debasement or to complexity or other types of risk or shorter term is kind of just, you had the thing solved and you unsolved the thing. And so anybody that says they're going to trade it, the conclusion you come to is they just don't understand it. They
100%.
they literally don't understand what they're doing, and they don't understand what it is. As soon as you understand what it is, you're just going to sweep all your excess monetary energy, your savings account into this and hodl forever